Hi. So in this video, I'll try to analyze why there is so much stress on fundamentally good quality companies. Okay. So let's start with the Kachra companies first and how the prices move for that particular company. And then we'll look at the fundamentally okay ones and then the good quality ones. So let's assume this is 2020 and up to 2030, that is over the next 10 years how these companies would be performing. So the straight line that I've drawn, right? So that one is the company's performance. That is their growth in sales and their growth in earnings, all that. Let's assume from 2020 up to this particular medium term bull run. So these Kachara companies would be having a pretty good growth during that time. And then what happens? The market corrects. That is, the economy starts to slow down, or else it would have a pretty painful year. That is when usually your economy starts to grow at 5% or around those levels, right? So during that time, what happens? Most of these Kachra companies, they would have a drop in their earnings. That is negative earnings growth, negative uh, EPS growth, and all of that. Basically, there would be a degrowth in that, right? So that this particular straight line tells you about the company's performance, whereas the stock price. So what happens in a bull run is even these Kachra companies. So 2020 was your crash, and now as we head to 2022, even these Kachra companies, the prices go up like crazy. But the problem here is at the end of this bull run, if you're still invested, the prices are going to crash. Okay, so this is what happens in a Kachra company. Okay, so by the end of 2030, if you are invested for a, let's say, next 10 years in these same Kachra companies, what might happen is you might not lose so much money, but you would not really make much money. Okay, so this is about Kachra companies. Unless you bought it somewhere around here or here, then you would be staring at a pretty huge loss. Okay, but let's say you bought the same thing at the 2020 crash, then you might not be staring at huge gains, neither you'll be staring at huge loss. Okay, so this is what happens in the Kachra companies. It is better to avoid such companies, and then we have fundamentally okay ones. So we'll look at how the fundamentally okay ones perform during uh, the bull and the bear market. So what happens in a fundamentally okay companies is they have a pretty decent growth during a economic upturn, right? And then when the economy kind of slows down, they have more like a flattish kind of a sales and earnings growth. Okay, during that phase, and then once again when the economy picks up, then they'll have pretty good growth, and then again they'll go into that consolidation mode. So this is what happens in a fundamentally okay company. And here the stock price movement would also be the same way, right? Same way in the sense, during an uptrend it would move up swiftly, and during the sideways market they usually correct and usually comes down below its fair value. So this, if you consider this straight line as a fair value of that particular company, what is going to happen is during the sideways movement they usually have a pretty decent correction, and then they'll again start to move up as and when the economy starts to move up. Okay, so this is for fundamentally okay companies and how the stock price movement would be there during the bull market and during the bear market. This is for fundamentally okay companies. Okay, even during a bear market, these fundamentally okay companies may not have a negative growth and all of that, but still the prices go down, right? So this would be the best time to actually buy them here, here, and here. Okay, fundamentally good ones, but still I would prefer you not to really play them unless it is for something like a positional trade, like you buy it at the end of the bear market and sell it at the top of the bull market, right? So for that, fundamentally okay companies are fine for that 2 3 year kind of a period where you have that bullish momentum, right? So this is fundamentally okay companies. Now we look at the quality one. So what usually happens in a quality stock? Okay, so these quality stocks, they grow rapidly during a bull market, they still continue to grow during a bear market. Okay, so this is what you'll find in most of the books written, something like a coffee can investing and all. So these quality companies, they know how to grow even during a bear market. Bear market in the sense during an economic bad economic situation, right? So even during that time, these quality companies would be gaining market share or would be innovating something new so that they can keep their earnings and their revenues growing. Okay, so this is what differentiates the quality companies with the kachra or the fundamentally okay ones. While the fundamentally okay ones would have a flattish growth and the kachra ones would have a degrowth, the quality companies would continue to have a pretty decent growth during a economic downturn as well. Okay, and then again once the bull run starts, these again outperform the rest, and then again during once the economics activity slows down, even then they'll be having a pretty decent growth, maybe let's say 7 or 10% kind of a revenue growth during even during that time. And how do the prices react during that time? So the prices, like in the 2020 crash, maybe for a few weeks the price went below the fair value of these particular stocks, but then once the bull run starts, these usually have a huge up move, and then even during a bear market they won't correct much. Okay, so something like an Asian Paints, Pidilite, all of these, even if they have some correction, they might be coming down to their fair value. So these would be the best time to actually buy these quality companies. Okay, around the fair value or just below the fair value, and then again once the bull market starts, these have a pretty solid up. Okay, so that is why if you compare the three charts, right? So if you have invested in a quality company in 2020, then you would be somewhere around here in 2030. If you were in fundamentally okay one, you would be somewhere around here, right? And if you are in kachra, you would be somewhere around here. So for the next 10 years, if you ask me which ones to buy, right? So I would say buy the quality ones. Even if you are buying it somewhere around here, even by 2030, you would be making decent amount of money in that. Okay. So this is how you differentiate a quality one with a kachra or a fundamentally okay one. And if you are an investor, right, make sure that you have quality stocks in your portfolio. Okay. Thanks for watching.